Hey there, welcome back to our channel. Today's topic is all about Fibonacci retracements. Fibonacci retracements are a popular tool used in technical analysis to identify potential support and resistance levels in the market. In this video, we will explore how to draw Fibonacci retracements, how to find support or resistance levels, and what are the important levels of Fibonacci retracement. What are Fibonacci retracements? Fibonacci retracements are a type of technical analysis tool used to identify potential support and resistance levels in the market. These levels are based on the Fibonacci sequence, a mathematical pattern found in nature. Fibonacci retracements are plotted using horizontal lines to indicate where the price might find support or resistance levels. To draw Fibonacci retracements, you need to identify 2 points on a chart. These 2 points represent the high and low of a price move. Once you have identified these points, you can draw your Fibonacci retracements. To draw Fibonacci retracements, you need to follow these steps. Identify the high and low of a price move. Click on the Fibonacci retracement tool on your charting platform. I am using TradingView. Drag the tool from the high to the low of the price move. The Fibonacci retracement levels will be automatically plotted on your chart. Once you have plotted your Fibonacci retracement levels, you can use them to identify potential support and resistance levels in the market. The important levels of Fibonacci retracement are 0.382, 0.5, and 0.618. To apply this setting, go to Setting of Tool and change or disable some values like this. Now all set. If the price is moving upwards and reaches the 0.382 level, it could find support and bounce back up. If the price breaks below the 0.382 level, it could indicate a further drop in the price. The 0.5 level is a key level of Fibonacci retracement, which often acts as a strong support or resistance level. If the price breaks above the 0.5 level, it could indicate a bullish trend, and if it breaks below, it could indicate a bearish trend. The 0.618 level is also an important level of Fibonacci retracement. If the price reaches this level, it could find resistance and move downwards. If the price breaks above the 0.618 level, it could indicate a strong bullish trend. Now, here's the pro tip: when using Fibonacci retracement to identify potential entry or exit points, it's important to look for confluence with other indicators or price action signals. For example, if the 0.5 Fibonacci retracement level aligns with a previous support or resistance level, that's a strong indication that it may act as a key level of support or resistance again. Similarly, if the 0.618 level aligns with a trend line or a moving average, that's another indication that it may be a key level to watch. In summary, Fibonacci retracement is a powerful tool for identifying potential support and resistance levels on a chart. However, to use it effectively, it's important to look for confluence with other indicators and pay attention to price action around the key levels. By doing so, you can increase your chances of making successful trades and maximizing your profits. I'll make more videos soon on indicators. That's all for today's video. Thank you for watching. If you have any questions or comments, please leave them below, and don't forget to subscribe to our channel to get more trading tips and insights. Take care, bye-bye.